Hello, everyone. Welcome to the Financial Advisors Want to Know podcast. I'm Catherine Tindall, a CPA here at Dominion Enterprise Services, a specialty CPA tax firm for advisory practices. Today's episode, we have Justin Goodbread. Justin grew up in Brunswick, Georgia, and he's developed a strong work ethic from an early age. He started by launching a landscaping business at 15, moved big places from there. He's had a passion for helping others and got into the financial services industry, where he got credentials like the CFP, Certified Value Growth Advisor, Certified Exit Planning Advisor, and we're going to be talking about exit planning a lot today, designations in subsequent years. In 2016, he founded financiallysimple.com, a platform that launched his successful podcast, the Justin Goodbread Show, blog, and YouTube channel. He's been recognized by Forbes and Kiplinger, and he's received awards such as the 2021 Exit Planning Thought Leader Award and the 2022 Peter Christman Exit Planner of the Year Award. He lives on a hobby farm with his family, enjoys outdoor activities, and is an advanced open water PADI. Did I say that right? Certified scuba diver. I'm impressed that you do scuba diving in addition to hobby farming. And he's also a talented musician and loves spending time with his sons playing Xbox. So that's quite the intro. Thanks for joining me today, Justin.
Thanks for having me, Catherine.
So in the pre-show, we were talking a lot about exit planning because the work that you do with advisors and thinking through exit planning for their practices. And then, on our side with the tax planning and, exit planning from a tax perspective, which, we discovered has different meanings for each of us. Really interesting lead into this conversation. I think to start off with, it would be nice to just talk through, what is exit planning and, your definition of that, and specifically for advisors, what they need to be thinking about when it comes to the exit planning in just a 30,000 foot view.
Absolutely. Exit planning is one of those words that often is misnomer. People often think, as you and I were talking earlier, that exit planning is where I'm now ready to sell my business. And now it's time for me to get a valuation, hire a broker, an M&A advisor, and find a suitable buyer. And that is typically what the thought of exit planning is. The reality is exit planning is all about creating a highly valuable asset that a third party, whether it be an outside buyer, inside buyer, bank lending money to your children, etc., a third party purchaser is willing to provide you best in class dollars. They're willing to say, hey, this is a business that I'm willing to put my money into and pay this individual who built this company the most amount of money possible. So what I often see with exit planning, that terminology is statistically, roughly about 80% of firms, business advisors, financial advisors, a little bit, let me say that differently. The way I often see it is 80% of firms available to sell never sell. That means only about 14 to 20% of firms ever sell for anything. And then those that sell, only 4% of those who sell are happy with the valuation. So think about this. You have financial advisors who are listening to me that have spent decades dealing with compliance, dealing with the regulators, dealing with the markets, dealing with clients, dealing with all these things. And more than likely, the majority of their net worth is in this business, this firm. And now they want to go out and sell it and have a liquidity event, move the highest illiquid asset into a liquid position. Whenever that transacts, exit planning is positioning that person where they can get premium dollar, top dollar for their business. It's not about, hey, I want to get a valuation and I'm going to go find a buyer. That's a broker out there. There's a ton of people who do that. Exit planning is, how can I make this asset to where it's highly attractive to somebody who's willing to cha-ching, write me a check.
Yeah, that's great. And I think that distinction of, because in the tax side of things, when we talk about exit planning, it's like what you said, it's executing that succession transaction. But in reality, what advisors really should be thinking about is, hey, it doesn't matter when I sell this thing. Exit planning is something I need to do right now, because if I'm not getting a good multiplier for this business, whether or not I'm going to sell it, it tells you that there are more things that are wrong with it as an asset, right? What have you seen for advisors who have put an emphasis on this kind of exit planning, the kind of, just to get people interested, what kind of transformations you've seen in terms of, increase of multiplier from people that are able to do this well?
Man, I could tell you several stories. I was just talking with one of our coaching students who's a financial advisor. We coached him through the exit. He had an 8-figure exit. We could talk about many. Let me talk about my story because I can tell that one like it was yesterday. I'm earning a designation and I'm sitting in Chicago, Illinois, and I was like, I know how to build a financial advisory firm that is going to be significantly valued in a very short period of time. So I walked out of this place, walked away from $250,000 recurring revenue, started an RIA from scratch, December the 17th, 2017. 49 months later, I had an 8-figure exit. The reality is exit planning is all about a mindset because exit planning is good business planning. It's you're taking yourself from the epicenter of your business, looking at your business as an asset. Same way we would tell our clients, look at their stocks or their portfolios or real estate, whatever. You're looking at this thing not as a legacy for yourself, but as an asset on your balance sheet. And then it becomes, how can I maximize the value of this asset? How can I take something from startup to 7, 8, 9-figure exit within a very short time frame? The reality is, and I love doing this when I was talking with business owners back before I focused solely with working on financial advisors, is I could tell a business owner, same thing is true with a financial advisor, that if you follow fundamental exit planning philosophies and exit planning structures, you can double your net worth in 18 to 36 months. It is extremely possible. Why? Because we as business owners had this very unique opportunity that we can't achieve through Wall Street, and oftentimes we can't achieve through real estate. We can pour tenacity and this vim and vigor, this excitement that we have within our person. We can pour that into our company. As long as we have the right roadmap, we're able to immediately build the value. And if we build the value in such a way that somebody's willing to come in, write that cha-ching moment, write the checkbook for us, then we could have a generational wealth decision. We could change our lives and our family's life for the rest of our life within less than 60-month time. That is the power of exit planning.
Yeah, that's great. And that's a really good point. Like I was discussing this with a client the other day about, they were really interested in real estate. And I said to them, well, given what you do, you can only, 1x or 2x an investment on a piece of property. With a business, you can 10x, you can 100x. Like you don't have limited upside the way that you do with a real estate investment. But the flip side of that, though, is like you said, is that you have to pour the tenacity into it. You have to do the work. But by using an established framework for how to increase the valuation, you can know what the roadmap is to do that. So I'd love to talk a little bit about kind of general guidelines that you have or the general roadmap that people need to be thinking about. Okay, so I want to change this. I want to change this business. I want to get a 10, I want to improve this, even if I'm not going to sell it, just to make it a better asset because it's better to own. And that's why it's valuable. What are things that you think people commonly screw up or just a common roadmap that you see advisors specifically need to take when they're thinking about this? Hey there, Catherine here. Thanks for listening to the conversation. Just wanted to explain a little more about what we do. So I'm a CPA here with Dominion. We're a tax firm that works specifically for financial advisors as they're growing and scaling their practices to help them avoid tax waste, make the right calls, and grow practices that they love. So if you're interested in saving more, you can DM me on LinkedIn with the word guide, and I'll send you over our guide for financial advisors to scale tax efficiently. All my top tips to unlock 6-figure savings. Thanks, and keep enjoying the show.
Yeah, let me deal with the pitfalls, if you will, that we deal with as an advisor community first. And I'll tell you the roadmap that I've used in my own practices, my own businesses, and what we teach now through our different coaching programs. So for those individuals who are financial advisors, one of our biggest pitfalls is we're too daggum smart. We are very intelligent people. We are constantly on the defense. We are having to defend our advice to the client. And they come to us oftentimes with the same questions over and over, and it becomes a rote response. And then whenever we get challenged, which we love, I know we do. I love being challenged by those clients who thought about a hard question or they had a circumstance which was unique. And then we go and do research. And as we get research, we build confidence. And then we become our own worst enemy. And so one of the biggest pitfalls that we have is we're too smart, and therefore we're often uncoachable. We're often uncoachable as business owners. That's the number one pitfall I see in the financial advisor community. So how do we get around that? How do we coach financial advisors so they can experience a 6, 7, 8, and even 9-figure exit like one of my recent consulting clients achieved? The way we do is we walk through a 4-step framework. The first thing we're going to look at, and the first thing we teach our clients, is you've got to understand what your value gap is. What's your value gap? So what's a value gap? You have a certain value on your business today. Whatever it may be, we can determine that through software, through analysis, through even real tried and true appraisals. We know what the value of the company is. But there are things that make the company multiple, as you asked in the earlier question, higher without increasing the revenue. So the two sides of value is we have the revenue and we have the multiple. Oftentimes we as business owners, we work on the revenue, but we don't focus on the multiple. There are things that we can do that drives the multiple up without having to focus on the revenue. So if we can understand, look, we have a business here and our value is hypothetically $1 million, just hypothetically, but yet a best in class. I mean, everything is perfect in this business. This individual is out teaching on stages in the communities, and they're showing you how to build a marketing program, a sales program, an operations program, XYZ, PDQ, keep on going, right? These are the best in class. And instead of $1 million with the same amount of revenue, that company's worth $2 million. Well, now we know we have a $1 million value gap. We need to figure out how not go out and work harder to create more revenue. We need to figure out how can we close this value gap. So that's step number one. We got to identify the problem, or we got to identify the opportunity, one of the two. The next thing is there are 8 key areas of business and 8 value drivers that we teach. And these value drivers are things that we would easily recognize, but we often don't look at them through the lens of 8 areas of business. So there are 8 areas of business that you as an RA owner and every business owner has. You have your planning department, not like financial planning, but how are you doing your business planning? Leadership, sales, marketing, people, the employees of your company, operations, finance, which is your department, and legal, right? So these are 8 areas of business. They have to work together. So we teach the 8 drivers of business and we integrate those 8 areas so that we can unlock that value. And there's 8 drivers. I'll give you one that we all know. What is owner dependence for your company? If you're the only advisor delivering all the goods and all the service and everything has to go through you, then you have a major owner dependence issue and you don't have a company that's going to get top dollar, period. Which is why so many business owners fail, because they don't understand the 8 drivers of value. So the first thing we have to determine is what's the value gap. Then we have to understand what the 8 values or drivers are and how they interact with the 8 areas of business. The third point that we walk our clients through is we now need to build a framework. You might call it strategic plan that you can adopt within your company, that you can get all your players, however many they are, whether it's 2, 3, 4, 5, 50, 100. We've got to get all your players, as I use in football analogy, facing the same end zone. We got to have them run the same play. They got to know what the play is. We need to have it broken down to where every quarter we know who is going to do what by when. They have the authority and the responsibility. So we walk through a very structured strategic planning process. That's number 3. And then the success point comes into play, number 4. And that is you need to have somebody who's been there, done that whenever the life events happen, whenever the circumstances and the what ifs come up, how do we get them in a position to where they can push through those roadblocks, push through those life events? And that's only going to come from a seasoned coach who's there hand holding you, working you through this process over and over. And then we repeat the process. How much value did we unlock through this last 90 days? How are we going to unlock the next value? And let's repeat. I'm telling you, Catherine, whenever you walk a business owner through this and they see the methodology, they understand how much value they have pent up, they get super stoked and they build businesses that operate autonomously without them at the epicenter, thus ultimately, and that's just one example that I've given, thus ultimately driving the value of the company.
Yeah, that's great. And, like I always tell people, you don't have to be actively planning to sell that business. You improving it as an asset is going to improve your life as the owner, right? Like once you're less dependent, it's less dependent on you. That's going to unlock so many changes.
If I may share a real story, because I know we're running out of time here, but if I may share a real story. So here I am building my own practice in that 49-month time frame. And I built it to where I was literally taking 6 months out of the year, making more money than I've ever made before, building value at the wazoo, using this structure because my coach was leaning into me and teaching me. I mean, I was a business owner for 25 years, already sold 3 companies before I started this journey. And then COVID happened. And here I am laid up in the hospital with my wife, who I didn't think was going to live. We literally were giving a death sentence for my wife. While I'm in the hospital for 16 weeks, the company grew. And here I was in a position where my wife looked at me and she said, Justin, what's another $1 million going to do for us? I can change your life. And at the same time, I was interested in selling. Somebody reached out and they said, hey, we want to buy your business. We see how you positioned it. And they made a best in class offer. And whenever I looked at it as an asset, I'm like, dude, this stock is at a ridiculous all-time high. It shouldn't be here. Heck yeah, I'm going to sell. And now here I am in my mid 40s, living a dream that many people want. And that is I have time in front of me, theoretically, with health and hopefully with longevity of life, but I also have money. And now the world is my oyster, that I now have built multiple businesses and now looking at other opportunities and helping now business owners, specifically financial advisors, accomplish the same thing. So you don't have to be looking to sell. Exit planning is good business planning. You're trying to increase that one intangible asset, which sits at the top of your net worth statement.
Yeah, that's wonderful. So I guess as we wrap up here, I'd love for people to hear more about how they can learn more about the work that you do, get resources. I know you've got a book out. How do you recommend advisors, who are interested in learning more about the work that you do and exit planning specifically, get in touch?
So I do have 2 books. My favorite book is Your Baby's Ugly. It was #1 on the Wall Street Journal bestseller list. You can check it out on Amazon. Well, I have a podcast, likewise the Justin Goodbread Show, where I teach business owners, specifically financial advisors, how to do this. So, but for those individuals who say, hey man, I want to follow you, Instagram, YouTube are great locations for them to follow. And they say, man, I need to be coached. I need somebody who's been there, done that, who's led RAs to 9-figure exits all the way down to 6 figures. I need to figure out how to do this. I'm willing to invest in my own life. Hey, check out justingoodbread.com. We have all of our coaching programs there. You can learn all about it. And my challenge to you is don't be the statistic. Don't be the statistic. Don't be that 20% who never sell. Don't be that 20% who never sell. More importantly, don't be that 4% who regrets it. Have the best day of your life. Put yourself and your family in a position to change your life and their life for the rest of your life. Let's not leave money on the table. Let's build our businesses to where they're best in class.
Thank you so much for joining me today, Justin. I really appreciate, your thoughts and energy and call to action there. For people interested, the links will be posted in the show notes wherever you're watching this. And thanks again for joining us on today's episode of Financial Advisors Want to Know.